Welcome to Next to Madison, a podcast to help you live your best life.
Welcome back to another exciting episode of Next to Madison. On today's episode, we are talking crypto and the economy, what we can see for the future of crypto, what regulations might do. I'm actually sitting down with a crypto investor, somebody who is very well known, has his own YouTube channel, Anthony Pompliano. It's a very successful one. A lot of people following it, a lot of people watching. This guy, that I really like about him is he just shoots straight. He doesn't hold back. He's not worried about what people think. He just gives it to you straight. If you're not following this guy on Twitter, Anthony Pompliano, definitely do. I love seeing his tweets. It's very interesting. And we're just going to shoot the shit on crypto. We're going to talk about his background and how he kind of got into it when he first bought Bitcoin, other coins that he's excited about, how he kind of his strategy of finding new coins, thoughts on administration, all this yummy, good stuff that you guys want to know about crypto. All of us obviously know what it is. It's constantly being talked about. It's a great way to make money. A lot of people are making money. So we're going to kind of get his take. He really is an amazing businessman, but kind of a crypto influencer. You know, people are watching him, they're following him, listening to him, and I am so honored that he has agreed to sit down with me and talk to us on this episode of Next to Madison. So it's episode 151. Again, do not forget, please, to subscribe, rate, review. It helps us tremendously. Love you all, and I appreciate you being here. We are with our guest, Anthony Pompliano, investor, crypto enthusiast, crypto, I would call him a guru. I would call him an expert. I don't know if he's going to say he's an expert. But anyways, we're talking crypto. So welcome to the show. What's going on?
Absolutely. Thanks for having me. Definitely not an expert, but happy to learn alongside everybody else.
Right. Well, exactly. That's the thing too, is I feel like if somebody in crypto is like, I'm an expert, it's like, are you really? I feel like everyone's kind of learning.
It's kind of hard to be an expert at something that's changing so quickly. And I tend to think that no one's an expert at anything. Everyone is constantly learning. So somebody sticks themselves out there as an expert in any field, it makes me a little cautious.
Yeah, this is very true. But you've been on a lot of media programs. I've seen you on CNBC talking about Bitcoin.
That may be the worst way to measure expertise these days is if somebody's on television, maybe they're not actually the expert.
So wait, did they reach out to you and say like, hey, come on the show? And
I think back in 2018 was probably the first time I went on. And I think they were frankly looking for like a little bit of a whipping boy. The Bitcoin and cryptocurrencies had fallen pretty significantly. Most of the kind of legacy investors were not super excited about going on television and saying, yeah, we're down, 50, 60, 70%. And I was either too stupid or too naive to agree to do it. And I spoke with probably the same enthusiasm that I would today. And they were like, man, this guy literally doesn't care if the price goes down or not. And so they kept bringing me back. And obviously that plays off well when the price recovers and goes back up. Then all of a sudden they're like, oh, that guy might have been onto something.
Well, absolutely. I mean, I remember hearing about Bitcoin years ago. I mean, we're talking like 2013. So it had been out for a little while, but it hadn't gotten mainstream adoption yet, right? And we used to perform. There was a girl that hosted these comedy shows at the Bitcoin Center in New York City. And the Bitcoin Center in New York City was a shithole. It was like an empty, like, storefront. And then we would go out back. Sometimes we would have the shows in there, and then, or we'd go out back and there was like trash everywhere. There was rats running around. And at that point, I'm like, who's buying this stuff? But they had a Bitcoin ATM. And then there was another dive bar in like the Lower East Side that had a Bitcoin ATM. But these people were onto something. And that girl was working for the Bitcoin Center. So she was getting all this Bitcoin, and she, let me tell you, doesn't do comedy anymore because she's probably worth hundreds of millions of dollars. So joke's on me.
Yeah, look, it's whenever you see some new piece of technology, I think what scares a lot of people is throughout history, usually it is the fringes of society. And fringes could be nefarious actors, could be people who don't necessarily seem to be kind of the mainstream technology investors, or however you want to measure that. But usually it's because, one, the fringes of society are the ones who are tinkering with new technologies. They're trying to figure things out. They have the technical breakthroughs. They've been working on this stuff for a long time. So there's kind of a technology adoption cycle that occurs with these early adopters that are on the fringe. The other thing is nefarious actors are first to adopt many technologies. So if you think of kind of the flip side, which is, there's a lot of criminals and bad actors that are constantly playing a cat and mouse game with law enforcement. And so who is first to realize, wait, we can use the internet? Who's the first to realize they can use beepers or cell phones or, computers, all that type of stuff. And so obviously, I don't think most people in a society want nefarious actors to have better technology than law enforcement. But at the same time, I think as a technology investor, it's our job to understand how technology is adopted for those trends and then kind of allocate capital accordingly. And so it's not surprising to see whether it's, fringe societies, whether it's, locations that maybe a banker wouldn't walk into, right? Or even bad actors in other parts of the world saying, look, we're going to adopt this first. That's actually a sign that the technology is valuable, it's superior to what's already there and likely to stick around.
Yeah, no, absolutely. So when did you first get into Bitcoin? What year?
2016 or so. And frankly, I thought I'd missed the whole thing because in 2014, I'd heard about it, didn't do anything. To be honest, the reason why I first started doing anything in crypto at all was somebody had pitched me on mining facilities as like a better data center. So they didn't give me what I call like the crypto or Bitcoin pitch. It wasn't about digital sound money. It wasn't about the Federal Reserve. It wasn't about smart contracts or kind of any of those digital technologies. It was literally buy a piece of hardware, stick it into some electrical in the wall, and you'll basically have a money machine. It'll just print money. And I said, that sounds amazing. And so I went and got started actually mining first. And then from there, you kind of go down this rabbit hole, right? You start to learn more about what exactly is this technology? What is the implications of it? Why is it better than the existing system? And pretty much within, 18 months or so, it became very clear that this was where a lot of intellectual capital, but also financial capital was going to flow. And so I decided to spend much more time working on it.
I mean, the whole thing is just amazing, because I remember thinking that too when I remember hearing Bitcoin had hit $4,000. I thought, why didn't I just buy it when we were at that shitty center? Like, what was I thinking? Like, if I could buy Bitcoin at $4,000 right now, I would be the happiest person in the world.
Yeah, here's the thing that I think a lot of people forget too is price has got like a very unique psychological impact on folks, which is there's a lot of people who saw Bitcoin super early, tens of dollars, hundreds of dollars. And when it then became worth thousands of dollars, they're like, I missed it. I shouldn't buy it now. Or they're anchored on that lower price point. Same thing actually happens in the other direction as well. So, Bitcoin was at $69,000 at one point. It falls. People say like, wow, I dodged a bullet, right? Like I could have bought it there and lost all this money. So it's going to now go to, $5 again. And so I don't want to buy it on the way down. And ultimately what ends up happening is you can use history as a way to understand what has already occurred. But taking history and extrapolating it, especially when it comes to price, is actually like a recipe for disaster. And so what I usually tell folks is you have to constantly ask yourself, where are we right now? And what do I think is going to happen in the future? And where I think a lot of folks break down in their analysis is it's hard to predict the future. And so naturally what you have to say to yourself is it's a probabilistic game. And do I have a high probability of being right? And if you can get to that point, then you probably should act.
You're right. And it's also like, do you really believe in it? And kind of like the backstory, there's always like in crypto, there's a lot of what we call shit coins or meme coins. And we all heard the story about the guy who forgot he bought Shiba Inu and then was worth like $5.7 billion or something like that.
I know a lot of people who claim that the best strategy in crypto is just buy everything, which is hilarious because it removes any intellectual kind of application or horsepower. But at the same time, it depends on what you're optimizing for. If you're optimizing for the most ridiculous, outsized financial gains possible, speculating in kind of high risk assets is a great way to either be a big winner or a big loser. And ultimately, that's the question, right? Is are you right or are you wrong? If you are trying to ensure that you are have a high probability of actually building financial security, then you actually want to avoid all speculation, right? It's kind of the way I at least evaluate it is, can you take the timeless investing principles, things that Warren Buffett or Charlie Munger or many other investors have spent, literally decades kind of identifying, and can you apply it to this new space? And if you can do that, what I tend to think will occur is you essentially will buy assets that are really high quality that you want to hold forever, and you'll buy them at times where you think that they're cheap compared to the value that they actually hold. And if you do that, buying low and holding forever a great asset tends to be a pretty good strategy regardless of the asset class.
Yeah, I absolutely agree. I like when I started getting into the crypto and started buying, like I would buy, what I call like, the blue chips, so to say, your Bitcoin and Ethereum. And then I heard, early last year, I'd heard about a coin called Cardano, which we're all familiar with, right? And I got real excited about that. And, my friend was kind of running a big YouTube channel on it. So went into that. And then other coins as well. But my mistake I made when I first kind of got into everything, which was like a couple of years ago, was not taking profits off the table and then reinvesting them, right? So I kind of was operating more as like a financial advisor would, where I was like, oh, this is going to be great for the long term. I'm just going to hold it, which could be a great strategy 5 to 10 years from now. But at the same time, like I could have accumulated a lot more by kind of going in and out. Now the market could go the other way and you could totally screw yourself. But I think it's important that people kind of take profits off the table, especially since, if you get these coins at a very low price, it doesn't hurt to take your principal out plus 20% and then just let it ride.
Yeah, look, I think that, each individual person, what they're optimizing for is obviously different. One of the big things that I think folks forget is that these assets are very, very volatile. Yeah. And ultimately, you have to ask yourself, why am I buying this or why am I holding it? And if your optimization is around pure profit or profit taking, you got to take the profits at some point, right? To your point. And so you've got to kind of know going into it, this is what I'm looking for. And I think one of the things that humans are really bad at doing is, one, predicting the future, but also two is being disciplined. And so if you in any asset class, whether it's a stock, a commodity, a cryptocurrency, whatever, say to yourself, hey, I am buying this asset. I think that there's a 70% chance that it's going to go up significantly over the next 5 years. In that situation, what I'm going to do is when it hits 10x, I'm going to take half of the investment off the table. And people are going into the investment believing that. Mm-hmm. And then all of a sudden they get to 10x and God, no, it's going up another 10x. I'm not going to sell any of it. Yep. And sure, getting new information and changing your mind is a sign of intelligence. But also if it's not rooted in some sort of refreshed analysis, and it's just pure greed or lack of discipline, then actually it's a horrible thing to do. And so you just got to be intellectually honest with yourself and say, how much of this is me having a new renewed thesis versus me just thinking that this is going to go up forever. And usually that doesn't turn out so hot. Yeah,
well, right, exactly. And there's a lot of also coins that I've heard about that I kind of FOMO'd into.
Like what? Give me an example of one.
Solana.
when did you buy it?
Well, Solana is one of my biggest mistakes. Not biggest. Hopefully it's my biggest. But somebody called me and said, you should buy, I think they said Bitcoin, Ethereum. This was August, right? Bitcoin, Ethereum, Cardano, and Solana. And I think Solana was like $34 or something like that. So I go up to one of my trading accounts and I didn't see that coin on that account. So I just said, you know what? I really believe in Ethereum. I'm just going to dump this extra cash that I have sitting in here in these stables into Ethereum. Now that was a good play. I made money on it, but if I had bought in Solana, but then it kind of went by and I saw it just totally take that upswing where it hit went right over $200 and I got it under 200, but it's now in the 90s. So it's like, oh shit, like that was a play. And if I had just kind of taken a beat and said, all right, like it went up a lot, like it's probably coming down significantly because this is an insane gains in like such a short amount of time. But yeah, Solana, that was it.
So here's my reaction to that, which is unless I don't know something, you're not a trader and neither am I. So don't try to be a trader, right? Yeah. Just say, hey, look, I'm going to dollar cost average into great assets and hold them forever. And I think one of the big psychological hacks for me was I literally said at one point, I said, I'm going to continue to dollar cost average into Bitcoin, and I am going to hand this Bitcoin to my grandchildren. And when I started to think of it from that perspective, like it's not my Bitcoin. It's not my Bitcoin to sell. And if you think about other cultures around the world, this is ingrained. So, let's go to India as an example. The family has gold. It's the family's gold. Sometimes it's in jewelry. Sometimes it's in little bars or coins or whatever. But they pass that gold on from generation to generation to generation. And if you're the asshole that sells the family gold, like you're basically the black sheep, right? Like you're kicked out. And so what ends up happening is the families who have had that approach, they've done very, very well for themselves. Not even because gold's actually gone up a ton in monetary value, as much as just it's held its value against fiat currencies that have failed or been devalued aggressively. And so when you think about that, it's the same thing here, right? I look at Bitcoin as a thing that I'll hand to my grandchildren. They'll then turn around and continue to pass it down. And my hope is that I scare the shit out of every single one of them and say, if you sell this gold or if you sell this Bitcoin, I'm going to roll over in my grave. So like, don't do that. And if you ingrain that into kind of the passing down of assets, it usually turns out pretty good for the people who are participating, from like a family lineage standpoint.
So if they can't ever sell it though, what's the benefit to them, your future generations?
Well, if you look at the wealthiest people in the world, they don't have, hundreds of millions or billions of dollars of cash. They have assets and they hold those assets, but the wealth is not in dollars. And I think that's one of the big things that we as a society have done a horrible job of is, my entire life growing up, the thought process was like, get dollars, get as many dollars as possible, put them in the bank and like, don't let anyone take them from you, right? Was basically the mentality.
Yeah.
But what you find now is that may have been good advice for our grandparents or our great grandparents. But today, if you just sit with dollars in your bank account, you're losing. So literally you've become poorer over the last 2 years if you've done that. And so if saving is a path to losing, then you have to hold assets. And so actually holding, let's say Bitcoin for generations, that is likely to actually be the driver of additional wealth more so than selling it for dollars or any other asset. And so I think that's really where people are starting to wake up and say, no different than if my parents handed me, Apple stock, or my grandparents handed me, gold or something like that. If I just continue to hold that over long periods of time, if they're truly great assets, then I'm incentivized both through the tax code and also the performance of financial assets and inflation to just hold it forever.
No, that makes absolute sense, except Bitcoin works just a little bit differently, right? So if you had Apple stock or any of these other stocks, you're at least getting like some dividend income, let's say, or benefiting from the stock split. So at least you're able to still have the asset, but you can benefit from it. to where you're
Yeah.
buying a house or sending.
There's definitely dividend stocks and various other things you do. I think that people who want to do that with Bitcoin, you could lend it out, right, and earn some interest on it. Like there's definitely things you can do to still get some cash flow. I just think everything has a trade-off. It's risk and reward, right? What are the interest rates that you can get on those loans versus what is the risk that you're taking, and you got to make that analysis, each individual person for themselves.
Yeah, no, that's exactly right. And so I think a lot of the whole, people are now, Bitcoin's more mainstream, but to really kind of make money and where our future seems to be going is that we are now becoming the banks. So, and that's what you're kind of talking about. So go into that for the listeners who may not be familiar with, okay, how can I make money on my Bitcoin? Obviously, I'm going to take some risk, but what's the whole kind of lending process and some of your favorite platforms that do that?
Yeah, I mean, in terms of like the banks, I think it's just sovereignty is the core of all of this, right? Where you no longer have to, I don't know, let's say that you had $100,000 or $1,000,000 or whatever the amount is. It'd be weird if you kept that in cash at your house, right? A lot of people are like,
Very
I don't,
dangerous.
yeah, I don't know, like, God forbid anyone finds out, like this is kind of weird, the whole thing. Or, if you take it to the extreme, literally the cartels, years and years ago, or, some of these like drug empires, they would have problems where they had so much cash that like rats were eating through it. Now
Yeah.
that's the extreme example, right? But like there's an element of this is physical paper, right? Or physical asset that you've got to be able to preserve. And so most people, around the world, majority of people put it in the bank.
Yeah.
But when you do that, you give up sovereignty of the currency. And what we're watching play out in real time right now is whether we're talking about, the protesters in Canada, whether we're talking about oligarchs from Russia, or many other scenarios around the world. Not having sovereignty of your assets is becoming more and more of a topic of discussion and a concern for certain types of people. And so I think that's like one huge piece of it. And then when it comes to lending, et cetera, my thought process is every single bank, every single platform is going to offer these solutions, and it's going to become somewhat commoditized over time, but not from a negative standpoint. It's just like the expectation of the consumer is going to be this asset has to be able to work for me. And whether that is me lending it out, whether that is me using it on the actual network itself, whether that's me simply just holding it as a savings technology, I need to be able to do things with it. And the people who understand that will build products and services to service those customers.
No, absolutely. Because I think everybody's finally like, especially with, pardon me, the rise in, cryptocurrency and being able to take control of your assets. And seeing kind of everything that's going on, people are realizing like, wow, because the old saying was, and maybe it's still true for some people, have an emergency stash of cash, right? Not under your mattress, but like in the bank. Like they say, 6 months. So if you were to lose a job or something happened or you had to repair, you had access to that cash. That was kind of the principle, right? But obviously putting it in there, you're not making anything. And it's ridiculous. So the banks were basically, they're still lending it out at this high rate, but they basically made it normal that we didn't have to give you barely anything for it. And so I think now people are catching on going, hold on a second. They're lending it out at 10, 12, 15, whatever percent, but they're giving me like, a basis point, so to say, some like shit rate that doesn't even match up with inflation, right? I'm still losing money sitting in the bank. And I think people wised up and they're like, okay, where can I go and put it to where it's actually useful and I'm actually getting a healthy return that's beating, inflation. So what do you think the future of the banks is going to be? Either they got to get on that model or they could be obsolete one day.
Yeah, I think there's two components to it, right? So one is if you look at the legacy organizations, some of them thrive and some of them fail, right? And this is no different than any other new technology. So if you take Goldman Sachs as an example, They have navigated everything from the launch of the internet, mobile phones, fax machines, and a variety of other technologies. And some of those technologies are consumer-facing technologies, like I mentioned. Some of them are super esoteric things like the SEC's mandate of XML technology so that machines could actually read the data in public filings, right? And so when you start to look at all these kind of various technology evolutions, they have navigated each one of those and continue to thrive. It's in their DNA to be able to do that. And so it's not surprising to see that type of organization to be one of the first to do an over-the-counter Bitcoin options trade, or to be one of the first to allow their clients to actually get exposure to Bitcoin and cryptocurrencies. And so those types of organizations where that's in their DNA, they'll continue to thrive, right? And actually this will help separate them from their contemporaries or their peers. Then there's a lot of organizations that, they're going to yell and scream all the way to disruption. And they're literally going to say that this is a scam and it's not valuable, it's a Ponzi scheme, whatever nonsense they're going to say. And they'll end up, being on the wrong side of history. And so I think you get that bifurcation in the legacy market simply because that's just how disruption occurs, right? As some people see it, some people don't, and it plays out. Then there's a second group, which is what I'll call the challengers. These are the brand new upstarts that are much more crypto native. And they have the advantage of understanding the technology, being early, having the intellectual capital behind it. And the disadvantage they have is they haven't been around for a long time. They're building a brand from scratch. They've got to establish a trust with customers, with regulators, with other businesses or vendors or partners. Yeah. And so ultimately, I think that's what we're watching play out here is the challengers have a unique set of obstacles, but I'd rather have their obstacles than being a legacy organization that just is fighting inertia, right? It's really, really hard to get your, kind of boomer oriented, not in a negative way, but just older generations get their head wrapped around something that they don't understand and then get them excited about moving forward and continuing to disrupt themselves. Because frankly, most of those people, got a fat salary and it's pretty comfortable to just go to work every day and do what you've been doing for the last 20 years and not rock the boat and go home and chill, right?
Well, yeah, and people are creatures of habit, so it's hard to kind of get them to change or, what's your thoughts on like Gemini, so to say? Because you can earn, like if you do their coin, you can earn, I think it was 8.25% recently.
Yeah, so stable coins are a huge business, I think, and ultimately, I'm surprised, frankly, that the legacy financial world hasn't caught on to this as quickly as kind of the crypto natives. There's not very many places where you can earn more than 1% on cash, let alone earn 7, 8, 9%. Yeah. And some of it's, there's a little bit more complexity. Some of it's that these organizations don't have FDIC insurance. And then some of it also is that it appears at least that there's just a lack of understanding or knowledge. And so when you add all that up, like, sure, if I earn that high of interest, to many people in legacy system, they think that sounds like it's too good to be true. Well, what do you mean I can get 8% on my cash? When you actually start to understand it, it's just simply a mismatch of supply and demand, right? Yeah. There is the supply that is available and there's a lot of demand. And until those two things end up kind of coming together and finding an equilibrium in the market, you're going to have a high rate, but that rate's going to come down. It'll get commoditized over time. And if you are a student of history, you know that same thing was true of the bank deposits. There used to be really high rates of interest in the banks, and it eventually came down because there was more of an equilibrium found between supply and demand. So same thing is likely to happen here as well.
So when do you think some of these CeFi or DeFi platforms will get FDIC insurance?
I don't think that that's going to happen anytime soon. I think that there's a number of organizations in the legacy financial system that appreciate and are going to continue to try to extend regulatory capture. And so what many of the upstarts or the challengers have had to do is they've created their own solutions. So there's everything from self-insurance to captive insurance that's been created. And these are folks saying, look, we need the insurance. And so we'll just do it ourselves. And I think that's part of being an upstart or a challenger is that the deck is stacked against you. The system is not put in a position where they're going to just roll out the red carpet and say, like, come in and disrupt the incumbents. you got to be so good that you disrupt them, even though the deck is stacked against you. And I think that's what we're watching a lot of these crypto exchanges successfully execute on.
So that's interesting. There's actually insurance that you can get. So if I was to put, let's say $200,000, or let's make it a bigger number, $500,000 in stable coins, I wanted to leave it there. I wasn't sure what to do. I stick it in a Gemini. I'm earning 8.25%. I can then go get insurance should they fail.
No, so the way that each platform is different, but just in a very generalized manner, the platform itself has either self-insurance or captive insurance, and they will have that insurance against theft or loss, etc. So what they won't do is if you accidentally send the stable coins to the wrong address, you're not covered. If you yourself get hacked, you're not covered. What they're really providing insurance against is if something happens to the Gemini platform. So somebody hacks Gemini or hacks Coinbase or hacks FTX or Binance or whatever the platform is. And you see this, I think probably the best example was Binance experienced a hack a couple of years ago where somebody was able to essentially get their hands on, I think it was only like 1 or 2% of the assets, but they were able to get it. And Binance, out of their own pocket, reimbursed their users. Now that acted as insurance, but that was very much self-insurance from Binance. And so I think it's less about like you getting the insurance, and it's more so the platform's trying to create a scenario where if they make a mistake or if there's something that they do that ends up violating the trust of their customer, they'll make it right.
Yeah, no, that and that's good to know. Okay, so it's not you, the individual, that has to go out. But yeah, people have to be very careful when they are changing, sending this money to different platforms. Obviously, to be careful, I always say if you're doing it for the first time on an exchange, send a little bit that you can afford to lose, make sure it gets there. And then, but what's nice now is like, when you paste in the address, it'll tell you the address as soon as you hit paste. Like there's a little pop-up that'll come and say, okay, this is going to Coinbase, or this is going to BitTrue or whatever exchange. So that gives you that reassurance a little bit too.
Correct. And I think that, the user experience right now has to improve, right? Again, student of history, go back, look at the internet. When the internet first came around, there weren't a lot of people excited about using it. If I had to type in the IP address was 101.9.73.422, right? That doesn't really seem like it's going to be easy to use. And how the hell am I going to remember all these IP addresses? Now, what ends up happening is I just go and I type in a human readable URL. I type in google.com and it's amazing. I type into a box and get an answer, right?
Yeah.
And so I think same thing here is I'm going to have to be able to have some way to do that. And, if you even think of your cell phone, for example, like you don't every time you go to use your cell phone have to type in the number of the person you're calling. No, it's saved in your phone. You just say, I'm calling this person, and you hit the button and it calls them. And so I think that'll have to happen with the wallet addresses and a number of other kind of user experience things that go on in the industry. And so to get to the point we've gotten to with people using the long string of letters and numbers, like all that type of stuff is pretty incredible, right? It actually speaks to how much people want this technology because it's frankly pretty damn hard to do, in its current form.
No, absolutely. So let's switch gears a little bit and talk about obviously we don't know because nobody knows the future, but what are your thoughts on when we're going to see a big recession, and how do you feel this is going to impact the crypto market?
Maybe we get a recession, maybe we don't. I have no clue.
I just feel like the only way we're not going to get a recession is if they just keep printing money, which is going to make inflation worse. So they're just fighting the inevitable. Eventually, I feel like we need to have a recession just to get through this shit and get to the other side. That's what makes me nervous.
It's a lose-lose. I tend to think that we've been backed into a corner through our pursuit of mitigating short-term pain. And that short-term pain has been solved for 20 years now by simply just inflating our way out of it. And that isn't necessarily a horrible idea. until you realize that each time you do it, you just make the kind of problem bigger and bigger. And so, yes, you get to kick it down the road, but you also make it bigger. And eventually what occurs is you gotta face the music. And so I think what we're starting to see now is at this time when we went to inflate kind of ourselves out of it, it was combined with pretty significant slowdown in the velocity of money given the government mandated lockdowns. It was also kind of exacerbated by the supply chain disruptions. And then on top of all of that is we then now have violent conflict on top of it, and kind of an abnormal kind of driver of higher commodity prices. And so you just look at the situation, you're like, man, this is like the perfect storm for financial calamity. And so really, unfortunately, the central banks only have 2 to 3 tools, depending how you look at it. They can essentially manipulate interest rates. They can go ahead and expand or contract the money supply. And then they can do asset purchases. And some of those are related to each other, some of them aren't. But if you think about the interest rate situation, actually what they would need to do to prevent some sort of financial crisis is they would have to lower the interest rate and they would have to expand the money supply. Well, if they do that any further, they're simply going to continue to extend and accelerate inflation. Yeah. Now, the part that I think most people lose sight of is if they don't raise interest rates and if they don't stop the asset purchases, if they don't start to contract that money supply and make it more expensive, inflation is already going to run out of control. So actually what we have is kind of the worst case scenario, which is they have to become monetarily tighter at the same moment that there's a potential macro situation where they should be becoming looser with monetary policy. And so it's just a question of what are you optimizing for? And, the historical balance has been you get inflation or you get recession, kind of pick your poison. In this scenario, there is a third option, which is they may get inflation and recession at the same exact time, which would be, mind-boggling in terms of how we got here. And so ultimately, I think people got to make a choice. And my choice has been, I don't want to be financially exposed in a major way to that chaos and uncertainty. So I'm just going to opt out, and I'm going to opt out into a situation where I feel much more confident. I've got some safety, and we'll go from there.
So you're saying you opt out of it, meaning that you're staying all in crypto?
90% of my liquid assets are all in Bitcoin specifically. I've got plenty of other assets. I've got everything from, commercial real estate stuff to a lot of early stage startups, whatever. But those assets, fortunately or unfortunately, in a really, really dire situation, are less than ideal. Right. And so what I really want to do is make sure that the assets that I have access to are in a situation where I have access to them and will likely be durable in that type of financial situation.
So are you in the stock market at all anymore, or are you kind of?
I own some equity in a crypto company that I got as an advisor. And then I've got $5 of Square stock, and that's it. So
why $5? It's hilarious.
Yeah, I signed up for a platform, and they gave me $5 to invest, and so I put it into Square stock. And then I've got in a retirement account, I've got some exposure to Bitcoin via GBTC, but that's not kind of a traditional public equity. So for all intents and purposes, I have zero kind of traditional stock portfolio. I own no S&P. I own none of the things people would think of with regular stock market.
Okay, interesting. Yeah, because that was always the norm. You would put it into either your retirement accounts and also, maybe an ETF.
I have no advantage. I have no advantage.
Yeah.
Right. What do I know that, where's my edge? Where's my advantage? What do I know that everyone else doesn't know? If I was going to invest heavily in the stock market, I probably would just dollar cost average into the S&P and into the NASDAQ,
Yeah.
and just let compounding do its thing. But the compounding is only occurring at, on a historical average, 8-10%, which sounds great, except for I think that I can compound at a much higher rate, frankly, with less risk, in the crypto markets. And so that's what I choose to do.
Yeah, no, it makes sense. I mean, a lot of people are starting to kind of go that route.
Do you have a lot of assets in the stock market?
Mainly just retirement.
Yeah. So it's like, I think that there's an entire generation of people that are just like, sure, you can still make money in the stock market, but a perfect way to look at it is official inflation in the United States right now is somewhere around 8%. The March number is likely to be much higher than the February number, given that a bunch of commodity prices, due to the Russia-Ukraine situation. And the unofficial number, if you ask somebody who is somewhat conservative, they'll tell you it's probably like 12 to 15%. If you ask somebody who's a little bit more aggressive in their forecast or analysis, they'll tell you it's closer to 25 or 30%. And so that sounds crazy until you start to see some of the underlying numbers, in terms of, if the official number tells you that food at home is up 8%, if it tells you that gasoline is up 50%, new and used cars are up double digits together, etc., you start to say to yourself, well, those are the official numbers. And if you look at something like the CPI measurement that comes in at that 7.9%, 33% of the CPI index right now is made up of shelter. And shelter, according to the US official numbers, is somewhere in the 4.5% higher this year than it was last year. But that 4.5% number is violating every known math equation in the world, because rent in America is up like 18% and real estate's up like 20% on a national average.
Yeah.
So how, if rent and real estate's up about 20% each, how do we say that shelter's only up 4.5%? Well, the official numbers say that. And so if you were to actually mark that at 18 to 20%, your inflation number would be 12, 15%. But then if you start to do this across the entire basket, again, real inflation could be 20+%, right? For a short period of time. And especially if you look at across the population, everyone doesn't experience inflation the same. So a wealthy person actually experiences lower levels of inflation at the same time that somebody who's not as financially fortunate, they're actually experiencing super high inflation. And so when you look at that, there's people in America today that absolutely are living through 20+% real inflation. And those individuals, even if they were invested in the S&P last year, which was up about 30%, they basically underperformed the historical performance because the inflation was so high that their real return on the S&P last year was under 8%. And so when you start to look at that, you're like, even if you were invested in the stock market, you probably still were not nearly as well off as people thought. And so then you got to ask yourself, okay, well, if I had real estate, well, if the real estate prices are up 20% and inflation was 20%, I'm basically just flat on a real return basis. It's like I didn't even make any money in any material way. And so what you start to have to do is you have to start to push out further and further on the risk curve and try to get a higher rate of return. And that's where all this speculation comes in. That's where all this kind of craziness in the markets comes in. People are saying, I don't need 10, 20%. I need 100%.
Yeah.
Well, where do you find 100%? Super speculative things that, would go up but double in a year. And so it's just this kind of reinforcing cycle that's just not good. There's just not a good answer.
Well, it's very scary times because people don't know, obviously, like we were talking before this started, like, rents in New York City are pretty much the highest they've ever been in history. I don't think we've ever seen prices like this. Is that sustainable? It's not, and it doesn't make sense to me, because it's like, yeah, okay, people are coming back to their offices, but crime is up. People don't want to go on the subway. Inflation's up. Where are people getting this money? It just doesn't make sense. I'm literally mind boggled. I'm like, who's paying this? You know?
The government's paying it, and the government's paying it via easy money, whether they're actually handing it directly to the people, whether they're easing monetary policy, whether it's all the insanity in terms of how they're injecting capital into the market via asset purchasing, or also, a lot of people forget this, but like, if you look at some of the legislation that they put forward, they got all kinds of asinine things in these bills where my brothers and I went through one of them one time, and they're literally, it's like $500 million to study, exotic plants impacted by the building of highways. Like, what? And then they wanted to do one clause, looked like, pretty sure what it said, based on the way we read it, was that they were going to authorize the government to go buy marijuana so they could study the impact of driving high. And, again, sure, if that's what you think is really important, but I don't know if during a pandemic, during a financial crisis, it's the time to be studying, driving while high. Maybe instead, if the government was entrepreneurial, they could just say, hey, you know what, if you got weed, why don't you come and participate in the test, bring your own weed, we won't arrest you, and you'd have a line out the door, right? Why do we got to spend all this money to do that stuff? So I don't know. It's just kind of a chaotic, uncertain environment. And I think most people are convinced that they should do nothing because they feel helpless. And that's an unfortunate situation. But that's the situation we find ourselves in.
I mean, it's crazy. Like, you just don't know what the future is going to hold. I mean, I feel so. Do you have kids?
I have a daughter.
Okay. I mean, I don't, but I have two nieces, and I feel for them. Like, what is the future going to look like for them? And it doesn't seem very great financially at the moment. It just,
I think that their answer is going to be the old you got to figure it out, and figuring it out, I tend to think, leads people to Bitcoin, cryptocurrencies, because that is, in my mind, Bitcoin is the last free market. It's the ultimate macro asset. It's the hedge against inflation. It's the hedge against all of the chaos in the political arena. And it ends up being the manifestation of a particular worldview, which may or may not have been popular in the past. But I think more and more people are realizing, this may be a thing that I want to read up on, become a little bit more educated on, because this may just well be what I need.
No, it's completely. It's, the Bitcoin's always been kind of referred to as a deflationary asset, and so people want to go there now versus like buying gold. Gold's heavy if you physically have it, but Bitcoin, obviously, it's digital. But I mean, it's such a crazy time. And obviously we have our administration, I'll save my opinions on that, that want to regulate this because they're greedy little bastards and they want their hands on everything, right? It's just the way it is. How do you think this is going to affect the crypto market when they keep throwing more regulation and more regulation on it? The last thing anyone wants is the SEC to get involved.
Yeah, look, I think that for years people have said we need regulatory clarity. And I believe that clarity is good for Bitcoin. It's good for the rest of the industry as well. Clarity does not ensure that the rules are going to be what you want them to be. It just means that they'll be clear. And there's a lot of stupid rules in the legacy financial system as well. But again, there's clear rules, and that clarity leads people to have confidence to wager capital in the market. And so if you said to me, have, no clarity or have clarity, I'll pick clarity all day long, because ultimately what we have right now is we have a lot of companies and teams that are operating with their interpretation of the rules, their lawyer's interpretation of the rules, but no clarity. That's a really tough position to be in, because it's hard to make decisions, especially if you know that they may come back later. And they could be any regulator in the United States or abroad. It could be politicians. It could be a whole bunch of different groups of people, and say, hey, you violated the rules, but the rules weren't clear at the time, and you violated them without knowing that you were violating. Like, people are just like, I don't know if I want to participate in that type of market. So I think that's really where folks got to be careful.
Yeah, no, it makes sense. Yeah, and I think that obviously more exposure and regulation has obviously led to this more of this mass adoption that we're seeing now within assets like Bitcoin. But let's switch to Ethereum. What are your thoughts on that coin?
Look, I think that it's very obvious. It's the second most valuable blockchain in the world. It pioneered this idea of smart contracts and led to a boom of kind of technical progress. And I don't think anyone can ever take that away from it. The question I think a lot of folks have now, whether it's Ethereum developers, whether it's users in the community, or even Bitcoiners or critics or anybody else, is how does it scale and how does it evolve from here? And so there's obviously the transition from proof of work to proof of stake. There's all sorts of development activity happening around like layer twos. There's now increased competition from other smart contract platforms like the Solanas, Binance Smart Chains, Polkadot's, Avalanches, etc. And so when you start to kind of add all of this up, I think that it's classic technology competition, right? You've got to be the superior platform, superior not just in technology, but also in your ability to attract users, to have kind of market acceptance or product market fit. And so it's going to be interesting to watch it play out. But I tend to think that the critics over-rotate, saying that it's worth nothing, right, and worthless. And I tend to think that the proponents probably over-rotate and think that it is the guaranteed winner and there is no competition and everyone else is just a pretender. Like, the truth's probably somewhere in between. It's got a huge head start, and obviously it's been very successful at doing a number of different things. But now there's increased competition, and there's questions about how it will evolve over time. But I think that's true of all technologies, right? It's just, that's the nature of how technology is built and scaled.
So speaking of Ethereum, because it was kind of the first blockchain to have them, what are your thoughts on NFTs?
Yeah, back in 2020, I wrote a piece basically saying, look, I think that digital art specifically and NFTs was going to be a really big deal. And I caught quite a bit of flack about it. And this was before, the big boom, before NBA Top Shot, anything. Most people hadn't really heard of NFTs before when I wrote that piece. And my thought process was frankly pretty elementary analysis of just like, this is digital art. And if Bitcoin is digital gold, and I think that digital gold will be bigger than gold, then I probably should think that digital art will be bigger than regular art. And the regular art market's huge. And the digital art market at the time was like less than $10 million. And I was like, man, this is going to be worth billions of dollars in the future. And so like in hindsight, like that was probably the right analysis around digital art. What I missed and later wrote more about was like, it's so much more than just digital art, right? This idea that, it's private kind of digital property rights. It's the ability to have digital uniqueness or digital signature. And I tend to think that many of the iterations today, majority of them, are people simply saying like, what exists in the legacy world? Let me just copy that into this digital world. And those tend to not really be that valuable or not have that much staying power, be that durable. Where I do think that the NFT market is going to become really valuable is there's a nativeness to it, like kind of a crypto native approach. What does this technology now empower you to do that previously was not possible? And if you use an example, like let's say Uber was not possible before the launch of the iPhone because there was no GPS in the mobile device. And so until both the rider and driver had a device that was a mobile device on themselves that had GPS in it, that they could link each other and find for a pickup or a drop off, you couldn't have Uber. Well, iPhone gets launched, bam, what's the companies that are now available? Oh, you can have app stores. Oh, you can have Uber, etc. Same thing here is somebody has to understand what is this technology, what is an empower that previously wasn't possible, and then go ahead and build those businesses or those products, and that's where the value will be.
Right, because they always say, like, when you're looking at an NFT, like, what is their utility? What is the roadmap? Who are the founders? Like, before it used to just be you could, like when Bored Ape launched, it was anonymous. Nobody knew who these guys were. And then they got
Correct.
doxxed, and now it's kind of a thing where people won't invest if they don't know who it is. And obviously nobody wants to fall victim to a rug pull. So you're trying to look at the utility. So yeah, it is more than just art. But obviously last week the ape coin launched. I'm baffled by that. I didn't buy it because I'm not FOMOing into that, right? But it's on my radar. I've got the alert. I do have a buy order in should it hit a price that I think is good, but not too much. That was unbelievable. I've never seen a coin launch at $6. It's like $6 and something.
Mm-hmm.
What do you think about this?
Well, I mean, if you think about where a lot of these coins find success is where there's a community of people who want to hold it, a community of people who want to use it, transact in it, etc. And ultimately, that's exactly what they did. Is they launched a coin, and that coin was put into a community, very rabid, very engaged, very large, and so therefore they were able to get some quick wins in terms of people or organizations that would accept it. I think the nightclub in Miami, 11, etc., all started to say, yeah, we'll accept that coin as well as the ones we already do. And so, there's going to be value there. I think the question is, where do they go from here? How do they incorporate that coin or that technology into kind of future iterations of things? And if they figure out how to do that, then there's a real business there. If not, then it'll go the way of most altcoins, and it'll kind of fall at the feet of Bitcoin.
Yeah, because it was interesting because I was watching they had a video and where they were going, and their involvement in Web3. And I think there's going to be some movie deals. Like there's a couple NFT projects now that are like World of Women is one. I think Reese Witherspoon's company signed on to produce movies on that. So if you're a holder of that, there's real value. So I'm wondering if they're going to launch a coin next. But I thought in the future, because everybody kind of wants to be involved in this Bored Ape thing now, or the crypto punks, they're kind of the ones that are very valuable. And this is a way for people to get in at a lower rate that can't afford a $300,000 or more monkey.
Yeah, I think everyone's going to try to do this, and whether they're going to be successful or not, we'll see. But I tend to think that the more that the world changes, the more it's the same. And ultimately, if people think that they have the ability to create value, they're going to try it. It's the economic incentive, capitalistic instinct. On top of that, I think that there's this element that people are still trying to kind of wrap their heads around. When they have the potential to possibly go ahead and print their own money, something that really excites them. And history will be the judge as to whether that's a good idea or not. But we'll see.
I know, it's just such an interesting time. One of our friends from college, I won't name him, but he had last January of 2021, he spent $150,000 on a crypto punk, and we all thought he had lost his mind. Well, he was right, we were wrong.
Yeah.
We're like, what are you doing? Well, he's doing very well now, and he's become very big in the NFT space, and I'm very proud. But yeah, it's a very interesting world. Were you at ETH Denver?
I was not, no.
So I went this year because I'm here. And so it was it was great because people were so friendly. You met a lot of people. Most people were there kind of on their own or with their business people. So everybody was talking. Everybody kind of wanted to get to know each other. But what I realized was it wasn't it's probably nothing like the Bitcoin conference. And that's what I heard from other people. They were like, oh no, this is not. this was a developer conference, right? So everybody was dressed basically like they rolled out of bed. It was just this weird group, but it was a fun group of people. But what was amazing was you would go to some of these parties and there was like almost like these crypto influencers, right? Taking pictures. And then I was hearing about people signing with like major talent agencies in Hollywood because of their crypto exposure. I mean, it's taken on a whole new world. I kind of was like, are we at a Hollywood party or are we at a crypto party? Like, I'm not sure where we're at, but yeah, it was very interesting. It was eye-opening.
I wasn't there, so I don't know all the specifics, but there's definitely a cast of characters at every conference, whether it's NFTs, whether it's Bitcoin, an ETH conference, any of them, and some of that is enjoyable and positive, and some of that I think people say, this is kind of a weird thing. So we'll see.
Well, yeah. And I mean, my friends that go to most of the conferences, they were like, oh yeah, the Bitcoin conference in Miami, which is coming up, is very, very different. So I don't know. Maybe I'll go to that. Maybe I won't. I don't know. We'll kind of see. But before we wrap up, what's a strategy that you kind of use, if you do, to find like new undiscovered coins?
I don't go looking there. No, here's why is I don't think that I'm a good gambler. And so the way that I basically look at it is I want to make sure that I get financial security. I don't want to potentially do it. I don't want to have to benefit from luck or probability. Just want to have a simple plan, have a pretty simple life, and just remain disciplined, and I'll be in good shape.
Amen. I think that's a great way to be, there's always, and I think, and again, this is not financial advice. I'm not a financial advisor. I don't think you're a financial advisor. I know you're not a financial
Definitely
advisor. Not. We can't give financial advice. What we can do is provide you the information, do the research, as I've said on other podcasts with crypto experts. But I think have your blue chip type coins that are there and invest in those, and then maybe have whatever you can afford, whether it's 1,000 or 5,000 or 10,000 or 100,000 in some case, of money that you could just light on fire, and then throw it around in different shit coins or other coins that you think are good. But obviously, if it's new and it's undiscovered, don't put more than you can afford to lose. I always say if you can't watch it in a fire, don't throw it somewhere where you don't know.
I tend to think if people want entertainment or they want to gamble, the casino's way better than the crypto markets, and they give you free drinks while you're at the table. So tends to be the way I look at it. But look, people want to have fun. They want to speculate, all that stuff. More power to them, right? I'm not here to judge them, and if they do it, I hope that they're successful. Is kind of the way that I look at it.
Right, exactly. It's like you always want people to win, Well, at least
Correct.
If you're not a complete piece of shit. But if you're a good person, you generally want people to win, which is a good thing. So, well, this has been amazing. Tell everybody where they can find you, like Twitter,
just go to
social.
Yeah, just Twitter. Just at Pompliano is the best place to go there, and you'll see everything else.
Okay, and you've got your YouTube channel, which has a large following.
Yeah, YouTube, it's just my name, Anthony Pompliano. You can go subscribe there, and pretty much post everything, YouTube, Twitter, all the different platforms. You can just search my name, and it'll come up.
Okay, well, perfect. Well, thank you so much for taking time out of your busy schedule to sit down with me.
Of course. Thank you so much for doing this. I had fun.
Yeah, absolutely. And thank you for everybody that's listening. If you have any questions, hit us up. We're on YouTube, but mainly you guys are all going to audio. So find us. You can always email us at contact@nexttomadison.com, and we will see you next time to find out who's next.
Hey, your host here, Madison Malloy. Please make sure to subscribe to the show on all podcast platforms, and please rate and review us on iTunes and Spotify. Also, if you have any questions or comments, you can email us at contact@nexttomadison.com. I thank you again for listening. Bye.